Good morning, everybody. Climber here. Good morning, Discord. Good morning, Simple Stocks. I am recording the morning notes video for Tuesday morning. We are only one day away from FOMC, which is tomorrow at 2 p.m. We get the rate decision, and then 2:30, in about 30 minutes following that, the presser starts, and then about an hour we follow that, and around 3:30 we will know what the rate is, and we will know what the tone is, which is usually more important than what the rate is or what the decision of the rate is. But make no mistake, if this market doesn't get its rate cut, they're going to throw a hissy fit. It may be short-lived, but there will be one. If this market gets its rate cut and the tone is hawkish in a way that, for example, we are not thinking of another one for a while, or we're cutting now, but it is largely because we're worried about the labor market, or we're cutting, but but the next time will probably be like not before the summer, anything like that. I think this market is just such a toddler-minded market that they may actually react to those, even though they got their rate cut. So I will be prepared. I will show you guys what kind of trades I am in, and I have been closing a lot of trades, so I will walk you through that. So looking at the board here, this is everything you're seeing on this board is futures. Natural gas and copper are the only outlier moves since last night, since the 6 p.m. open. Natural gas is incredibly overpriced. It's hard to understand what it was doing, but I think the idea there, largely from what I can understand, is that the Russia was going to be taken out of the game, and therefore the supplies would contract, and U.S. would primarily be the main supplier. But I don't think that's going to happen, but we've been riding that wave basically for the last about 45 days. I don't have any trades in it, but I'm about to put on some trades. I will share them in Discord. So other than that, we can jump and take a look at our charts. So maybe before the charts, we can just take a look at this quickly. So this is the rate cut probability. Our current rate is 375 to 4. This is our current target rate, and we're expected to be cut another 25 BPS. So, and there is really nothing else in the horizon that shows a big probability, but we know from the previous FOMC notes that their targeted rate cuts for the next year is should be another 2 of them at the very least. That, like this year, it may not come until the tail end of the year. All right. So let's go to the charts now and then try to get ourselves oriented for the day. I'm going to start with this one since FOMC is the highlight of the week. Now, we do have data coming up today. We have some ADP and we have some other data coming out today. And for the rest of the week, especially tomorrow morning, if they didn't cancel it, CPI should be coming out. It will be the last important data point, or the most important data point before Fed actually comes out. So RTY, we had this incredible big day. This was last Wednesday. It was a very, very powerful day, and they did follow up with that. And this is not what the market was doing when this was happening. So this was a little bit of an outlier move on Russell. And then settled into a more consolidation thing. So they have this little flag pattern going on here. The hope, obviously, is that they launch another one here tomorrow, and then they beat the October 2025 high, which is, I think the yearly highs are here. That's 59, and that one is, I believe that's higher. That's 66. Yes. So the October high is higher than the late October highs are higher than the other one. So we'll see what happens, and I have no doubt they have a little bit of in them to make it closer to 2600, which I'm prepared for. But any bigger spike than that, any bigger spike into the into 2600s or so, I will be selling calls at the on RTY. I will go to 15-minute, actually 2-hour chart first, and then take it from there. All they have to do this week, in my opinion, is to basically preserve the 2503 line right here. this red dash line, and they will be good to go. So whatever the decision is tomorrow, as long as they preserve this, I think RTY is going to successfully find enough buyers. If they cannot preserve this and then drop to 24.74, then I think I will call it that indecisive. I think if as long as they hold this, I think it still remains bullish, but it is more indecisive. And if they go back to 52, which is this band has been a very big contention band. So if they go back inside of this band, I'm going to say that that the people who are thinking that this market is going to sell everything else and then start buying the small caps, I think they are a little bit more nervous than they were before the rate decision. So I think this will be we will be back to consolidation. No, not necessarily a bearish or bullish, but we don't know kind of band. If they lose 52 after the decision tomorrow and then go to 17, then I will say that RTY has put in a top for the near term. Okay, that's how I am thinking of playing it. Smaller time frame for the day. Let's take a look. We have our pivots. It's really important to understand these black lines. These black lines are more important than the pivots for longer term, like these are daily levels, and the pivots are really there to help you to trade the day and the week. Okay, so a close above 35 is very bullish. A close near 74 is not so much. There is a lot of indecision if that happens. So based on what this price tracks, make your decisions that way, and a close of 25.03 is a really huge step. Especially this level will matter for 2026. As you can see, this is a monthly target from COVID, and they tend to really matter, especially deciding what the ceiling and the floor is going to be for the coming weeks and months. All right. Jumping to ES, here's a daily look on ES, and I'm going to flip the screen, and this is the daily look on NQ. Again, back to ES. So we are in a bit of a consolidation mode, but it's all higher highs up until yesterday. Not a big deal. The patterns can break for a day, and that doesn't mean that the pattern actually broke. It just means that the flow of the pattern got disrupted. So I think today it's going to be very important for them to hold certain levels, which I will show in a smaller chart. But this big dash line here, this 68.81, is really extremely important for the week. They cannot close below this line, in my opinion, close out the week on Friday. And for NQ, the same line is 25, I believe 25.720-ish. Okay, so keep your eyes on those lines. They will matter. They always do. Closing below that, if we actually end up closing below that, then we more than likely actually close below this green line as well. So it won't be just closing below it. I think it'll be closing a very key level for ES, that's 68.25. Let's go in the smaller chart and then take a look at some finer levels on the 15 minutes. Here we are. So Thursday and Friday, by the way, we had an amazing in-person event in Florida. We had the live trading room event. It was amazing. It was probably the best event, my favorite event so far in the last 2 years. We traded this day, live with the group in the classroom, and we traded this day. Both days were amazing. This was a short. This was the unreasonable meta spike in the morning. We set a call credit spread and we scalped it. We went long. I think some people scalped it here. Don't remember doing anything here, but right around here, close to the end of the day, we put this credit put spread on. We said this market isn't going to lose its shed overnight. It's going to go up, and we set that, and some people literally scalped it. The move came like within 3 or 4 minutes of resetting it, and some people kept it to max gains and then basically scalped it overnight here. That was an amazing day. And Friday, if you can believe it, was even better. We started the day with an iron condor right here before the open, and some people actually bought a put before this move happened. So some people were in iron condors and a put. They cashed their put. Then we got the spike. We set another big trade. So we got ready for this one. The pivot was right around here, somewhere around here, 69.04-ish. We had 20-25 minutes to plan this, so almost everybody in the classroom took this short. It was amazing. Some people more than made the cost of the trade there between the 2 days. And then close to the end of the day, all the iron condor people also had max gain. So the market closed inside of our iron condors. It was amazing between both days. Excuse me. So great. So thanks for everybody coming. It was really fun, and we did cover a lot of ground there. So looking to today and maybe tomorrow, this 2-hour chart, I actually meant to show it here before I start to find resolution there. If you can look at this chart, this is our 10-10, October 10 drop, and this is our November 20 drop, okay? Markets were basically at 6,800-ish early October, then they were at 6,800-ish late October, then they were at 6,800-ish early November, then they are at 6,800-ish late November. So what has been going on right now is an entire month of October, November, and looks to be maybe even December. So here we are, December 9. We could just put a candle in and touch that 6,800. I mean, it's a rock throws away. So yes, the market has been going up, inching up a little bit, but if you haven't been trading both sides of the market, you really didn't do well. You needed to have some puts and some calls or some shorts and longs, and then just kind of retrace the market as it makes its moves. If you just picked a side and just basically played it once and then just waiting for it to go to the other side again, you really didn't do well. So my advice is that you need to carry both sides of the market, and this has been true basically for all year. So we'll see what happens here, but we are basically trying to either see that we lose 6,800 or we just go above 6,900 and then never look back. And this has been the pinched 10-day price action so far in between these two arrows. Now looking at the day in that context, 68.49 is a huge level. As you can see, what they did yesterday, this is yesterday. They were below 49, and just before the close, they spiked above it in typical fashion, something that they love doing. Today, I am going to say it again. The daily closes cannot be below 68.49, and to get out of this rut, this sideways price action, all they have to do is start closing dailies above 68.81 and then step up from there on. All right, but it's not happening. It's still sideways, and at this point, I think they're going to just zigzag and then basically wait for the decision tomorrow. I'm gonna make my warning. If you guys are thinking that, if you guys are loaded like big time on the longs and then thinking that tomorrow's spike will eventually pay you, it is entirely possible, but it is also entirely possible that it'll be unimpressive. There will be a spike. It may not be as high as out of the money as you think. It may not be as early as you think. We may get a move tomorrow. Actually, market might sell, and then only to come back next week or maybe Friday or next week to turn around and then go higher. So I think you should really be cautious for tomorrow, and your trades should reflect both sides of the market. I would not pick a side and then play just on that side. So I have iron butterflies I'm going to jump to SPX quickly. I have iron butterflies for 69.50ish. I also have iron butterflies for 67.50ish. So whichever side the market goes, I'm going to get paid. I'm a very balanced trader, and that's what tomorrow's trades also look like. I did the same on ES and SPX, just the same idea. I also have, just in case they didn't give me a spike up or a whoosh down, I also have iron condors on RTY both this week and next week, and I also have iron condors on ES. So whatever they want to do, I know for a fact that I'm going to scalp that move. I'm not going to hope for more, and I'm just going to try to close most of the trades tomorrow, all of the trades that I open for FOMC. I'm not going to try to stay in them hoping for more. All right, that's my message for tomorrow. And for the day, if they wanna give a message like a bullish stance for tomorrow, they're gonna have to close above this line. And if they don't wanna kind of drift lower overnight, they're gonna have to close above this line. In between, we might see ping pong today. This will be our small box for the day, and R1 68.93 to S1 68.35 will be the large box for the day. I do expect some moves today. I think we're gonna move, but this initial box will determine where we go and how we go. And the early signs of getting stronger for the day will be starting to hold this pivot line 68.64. So if they can hold this little area here, then you should really look at here. And once we start closing 2 or 5 minute candles above this line, I would not short the market anymore. I think they might actually float at least all the way here. Once you get to prior day high or prior week high, again, it's anybody's game. These are better areas to short, but I would not try shorts here. And once they start drifting below this 49 area, I also would be very cautious with the longs, because if the prior day low doesn't see a fierce bounce, we could actually drift lower overnight. All right, so that's what I'm seeing. Let's go to the 2 minutes, and then I will quickly touch on the commodities also. Yep, the price is very pinched, nothing's happening, and there will be data in 15 minutes, so I will try to upload this in the next 5 minutes or so. Quick look at gold. It's a really the overall trend has been, the pattern has been broken. This is a very jagged chart for a weekly chart, as you can see how different the tone was before. So gold is trying to decide what's happening, and this is definitely not part of the previous trend, especially if you look at the monthly chart. The last time we have put something like this, which is right here, look what happened. Are we beginning settling into a similar pattern of this on the monthly? We don't know, but we need to be aware of it. Okay, this is not an upward trend, and this is also not a bullish trend in my opinion. This is very jagged for a weekly chart. They tend to be very different than the daily charts, and the daily chart is basically telling us that this has been a really big trouble area. I do agree that if they close above this area, they're going to float higher, but I think the gold will kind of follow the markets and the Bitcoin, which brings me to this chart. It is still very weak, and my whole analysis about Bitcoin is that if they don't get a massive daily candle, that brings us right here, right around this 100 and 101 area. It is a psych area, but it is also a very technical area in my opinion. If you don't get a huge candle and then reach there, I don't think Bitcoin is gonna make it. I think we're gonna go to 71K. So I don't think we slow trade, we technical trade here. I think Bitcoin is gonna have a massive candle, hit it here, either breach it or fail, or Bitcoin is gonna go lower to 75K. Next thing I want to show is this. I mentioned in the beginning of the video, I think it's gonna go lower. I think we're gonna hit $3, and just before we hit $3, probably around $4 or so, I'm going to put a range bound trade, and I'm also going to sell credit put spreads, which I always do late November, early December, but this year it got away from me before I can set it because it started running in October, which usually doesn't happen. So I'm waiting for that. I will share the trades. And Crude is not tradable right now in my opinion. Intraday traders, yes. When I say not tradable, I'm not ready to put on trades. I want crude to come lower in the below 58. Once it comes into this cluster, maybe this area, not up in this area, I will go long again. We went long here, we went long here. They were fantastic trades. Each time we put on 4 different trades. And I'm going to do exactly the same thing once it's hopefully in the low 57s. Okay, and I will also short here. Shorts should be above this area to this peak, or one of these guys here, which will be the take profit areas once I go long. All right, and I think that's it for today. Very quick look at SPX. You guys saw the SPX chart. Very quick look at the pivots for the day. This is SPY. And this is QQQ, and also a quick look at the SPY daily chart, and maybe and maybe the mega caps. So this is basically what I'm watching. The sectors are weak. They pretty much all of them closed red yesterday. So if we're going to make a move, like, and I mean a really meaningful move, like 200 points on SPX over the course of the next few days, some of these guys will have to wake up, and these matter least. Whether Apple, Google continues their move, it doesn't matter. They're spent. Google doesn't have it. Apple is not gonna move a lot higher without the market really getting super excited. So I'm really watching for Microsoft, Meta, and largely Nvidia to beat some of their moving averages and then actually start marching up. All right. Have a great day, everybody, and you know where to find me. Peace.